Hello, Mike Swanson of WallStreetWindow.com here. Today is one of the most interesting days in the financial markets all year. We're seeing a massive trend change take place in gold and mining stocks, which really represents a money shift that's only starting. To understand what's going on, we've got to go back though to last month in July, where Janet Yellen gave very important testimony to Congress that gave a virtual green light to people interested in investing in gold, silver, and the mining stocks. What Janet Yellen did was lower expectations on future rate hikes. Now, if you can recall, back in December, going into this year, people were expecting, and the Federal Reserve itself was predicting for 4 rate hikes in 2017. Now, that, of course, has not materialized. It's not going to materialize. And in July, during her testimony, Yellen really made that explicit. And that is a green light for buying gold and mining stocks and silver. And of course, the U.S. dollar is actually trended down a little bit since then. And actually, all year it's trended down. And Treasury bonds, the long-term bonds, have gone up. So we see these moves in the markets, but that buying in gold and silver and the mining stocks did not create a breakout until now because of the overall long-term pattern. But right now, as I'm doing this video, GDX has gone through the $24 resistance point. It's now trending up. The GDX divided by GLD ratio, my absolute favorite indicator, because it tends to be a leading indicator on the trend for gold and mining stocks, it now is trending up, breaking through a base, breaking a downtrend resistance line, going all the way back to last year. And gold itself has gone through the $1,300 an ounce level. What that represents is a long-term consolidation level in gold, and also the GDX divided by GLD ratio. Now, if you can think back to 2016, gold and mining stocks completely exploded. GDX, the gold stock ETF, and I do own it, you should know that, but it went up tremendously from the first quarter until about July, August. More than went up 100%. It was the top performing thing in all financial markets, period. Went up much more than the stock market did, and even year to date for 2016 it was up something like 50% more than the stock market went up, despite the fact that in the summer it topped out. What happened was many people sat on the sidelines as they watched these things go up in the beginning of the year and in the spring, and then bought when it was topping out. In fear of missing out, they got trapped. And then gold reversed, the mining stocks reversed, and we entered into a very long, drawn-out consolidation period. Now, what you got to understand is that this pattern is actually very typical of what you see at the beginning of a bull market. Beginning of a bull market, you get a first leg rally, which is fast and can be tremendous in size. Think back to the stock market in April and May of 2009. It went up more than 50% roughly, and the gold stocks exploded last year. Massive rally, but typically at the first leg of a bull market, when it's that big of size, you then get a drawn-out consolidation period. That happened with the stock market towards the end of 2009 and much of 2010, happened in 2004. That's basically what's happened now with gold and mining stocks. And that's why the 200-day Bollinger Bands have come so close together. The width indicator around 20 on GDX, and now we're in the process of breaking out of the upper 200-day Bollinger Band. Not going to go into all the specifics of that, but make a long story short, that they're long-term volatility bands, and they shrink. It means volatility on the long-term time frame of 200 days has also shrunk, and it's very rare to get that down to 20 of width on the indicator there. What it means is that you're in a sideways consolidation pattern that when it comes to an end, you're going to get a big rally. And as a general rule of thumb, when it comes to technical analysis, the longer the consolidation period goes on for, the bigger and the longer in time of length the coming rally is going to be. And today, as I'm doing this video, that rally is beginning, and that makes this one of the most critical turning point days of the entire year for all financial markets. Because going forward, I fully expect from now to the end of the year for gold, for silver, for mining stocks to outperform the S&P 500. Most likely we're going to see them emerge to become the top performing sector of the year when we're looking back on things on December 31st. And I think they're going to go up beyond simply from now to the end of the year, but for years on end, we're probably going to see them outperform the stock market. So that's where we are. And what are we going to do about this? Well, I have been recommending buys going into this time period for my private group. We've got individual mining stocks we're in, of course the ETFs, but I also do this in context of having a well-diversified portfolio. I don't believe anybody should be 100% invested in the U.S. stock market right now, but likewise I don't think anyone should be 100% invested in gold, 100% invested in mining stocks. You got to have a diversified approach, and this is going to be more important than ever because I think we're starting to see some changes under the surface of the stock market that's going to really take people by surprise. And I want you to be ready for what's coming and to participate in this rally that's starting. So accordingly, I'm opening up my total gold trading program today. This opening is going to end on Wednesday, August, I think it's the 30th at midnight. Why so soon is it going to end? Very simple. Because this rally is just starting, and I want to do everything I can to get you into this at the beginning of the rally and not like 6 weeks later. I'm not a guy on Fast Money or CNBC that is like going to tout something day after day after day after it's already gone up a whole lot. I look for good entry points to get you involved in, and I think this entry point is going to be gone that quickly, and I'm not going to be selling my total gold trading program when gold's at 1400 or some, who knows where, 6 weeks from now. So get in now. What you're going to get is my total gold trading program, 7-module course that shows you how I pick out mining stocks, how I use gold stock ETFs and gold ETFs in the context of a diversified portfolio of ETFs using a specific rebalancing money management strategy. But more than that, you're going to also get as a bonus my report on 15 individual mining stocks that I think are the best ones to buy right now. They all pay dividends. I own every single one of them, in fact, and they're already starting to go up crazy. A couple of them made new 52-week highs today, actually testing their highs of last year already, outperforming GDX. So I look for stocks that outperform, and that's one of the ways I like to beat the stock market, So you got to get this list of my 15 top stocks. You also will get a trial 30-day membership to my Power Investor private group. You'll get all the updates for the next 30 days. If you decide they're valuable and they're going to help you going forward, I think you will easily see that, then you can continue on for the rest of the year in what I think are going to be the most critical months of this cycle of the stock market that we've seen in years. Certainly this is a critical day for gold, critical day for the mining stocks. If you're in them, congratulations. Enjoy the ride. But let me help you do as much as I can. Get into my total gold trading program. Get into my private group. This is the moment in which gold bugs are now asserting leadership and control of the stock market, and I want you to be a part of that. But also you're going to have to be alert to what's going on in the Dow and the S&P 500 from now on. Things are starting to change. Get in the group, get the total gold trading program, and I'll talk with you on the other side.